Hi everyone. Hope you've had a fantastic start to the day and the previous sessions have kept you busy and provided you great insights. I'm glad to welcome Kelvin and Moses from Funding Societies and Xendit respectively as part of this discussion. And we hope to have a very engaging, insightful conversation around building fintechs that go regional, global, just cut across borders and build great businesses globally. So with that, maybe we'll start off with a quick introduction, and I'll hand it over first, maybe to Kelvin, to talk a little bit more about yourself, tell us about Funding Societies and what you're building out.
Sure. So I'm Kelvin. I'm the co-founder of Funding Societies. We are basically a 7-8-year-old fintech company started in 2015. Our vision is really to empower small, medium businesses through financing. So basically, we give short-term working capital loans to both traditional SMEs as well as startups like yourself. So currently we are present in 5 countries in Southeast Asia: Singapore, Indonesia, Malaysia, Thailand, and Vietnam. So if any of you are expanding across countries, we'll be happy to support you all. Last year, we made an acquisition of a Sequoia payments company called CutUp for us to build payments to really complement our lending business. We are a Series C plus company. Have raised slightly short of $200 million of equity from SMBC, from Sequoia, from Vision Funds, so on and so forth. Personally, I come from a consulting background, started my career with Accenture before moving on to McKinsey, KKR, and Harvard Business School, and that's where we started the company.
Awesome. Thanks, Kelvin. Moses, how about yourself?
Hi, I'm Moses, one of the founders at Xendit. We're a payments infrastructure across Southeast Asia, so we help businesses accept payments and send payments all across the region and across the globe. I think we process 35 billion US dollars of payments for names like Traveloka, Ticket, Samsung, Grab, etc. A little bit of our journey: we started originally as a Bitcoin hackathon between Berkeley and Stanford. Came up with an idea for sending money from Hong Kong to Indonesia using Bitcoin. The first time Bitcoin was cool, we got into YC with that idea, pivoted to then kind of an e-wallet, and then managed to get 200,000 users in 6 months. Then we pivoted to what we do now in 2016, which is payments infrastructure.
Awesome, great. So fascinatingly, you guys have had incredible but very different journeys in how you started up and to reach the point where you are today. And I'd love to dig in a little deeper to kind of understand when you started up, you were focused on one country, Kelvin, right? And you quickly decided to expand out across that, right? So how did that transition take place? What was your thought process?
So when we started in 2015, we actually, Reno and I were actually still doing our masters at Harvard Business School. So we did it as a distributed team, actually. So we basically hired people through startupjobsasia.com, we interviewed them through Skype, and we paid them through internet banking from our own personal account, right? And Singapore was our first market because it's the only country that we could have done that. But at the same time, we realized that because fintech was so new at that point in time, you will need validation from regulators, and Singapore probably was among the easier regulators to work with. So we started in Singapore. But within 6 months, we launched in Indonesia because we realized that our business model, we are effectively cloning a business model that is relatively well understood overseas. So therefore, execution will be critical. So we needed to be fast. At the same time, we needed to have certain scale. So that's why we entered Indonesia very quickly, and then Malaysia subsequently in 2017. So within 3 years, we entered into 3 countries so that we have critical mass and we can be ahead of any new peers because it's a new market. Having said that, if I'm in a business that I'm building a mutant or an alien, right? It's a new business model that no one else have understood before. Probably I would have taken a different approach. But we have entered very quickly because we were cloning what happened in other markets and trying to adapt it to Southeast Asia.
Very interesting. And with that, did you have an idea of what were sort of the success points or the proof points that you were looking at in Singapore before you decided to expand quickly into the second and then the third?
So before we actually raised our seed round, we were already post-revenue because and candidly, when we first tried out lending, in terms of what kind of choice of lending products, we kind of throw everything on the wall and see what sticks, right? Which was exactly what Harvard taught us to not do, right? Like they always say, do market research, blah, blah, so on and so forth. But we realized that for you to maximize speed, the best proof point is you have customers. So we just did everything and we see what works out. So by the time we launched in Indonesia, we already have some level of customers, not big enough to say that, hey, this is a successful business, but at least we know that, hey, there is some form of it could work in Indonesia.
Got it. Fantastic. And Moses, for you, I think, running a Bitcoin crypto company or the origins the origins being in that and then across in payments, there was a natural inclination to be multi-market, right? You were born with that kind of a mindset. So how was your thought process when you started up? Did you want to be in 10 countries, 5 countries, 20 countries?
For the longest time, I only wanted to be Indonesia, because the idea for us was we wanted to come back home and build something that could change our home for good, and change it in the right way. And we thought, hey, we can go fix these pipes, the underlying bits of infrastructure. We can lift industries and we can lift the nation. What happened over time, though, is there was kind of two things that pulled us in looking at the region. I put that as two fundamental human emotions, greed and fear. The greed was customers were asking us to go build somewhere else. So it was Grab, it was Ninja Van, it was Shopback saying, hey, what you've built in Indonesia, can you build a similar thing in the Philippines? So that was the greed part, a desire for us to go. The fear part was then, we're one of the first Southeast Asian companies into YC and the first Indonesian company, and what YC said to us was always, the people you should be most scared of are people that kind of look like you. They can execute, they can go build something big. And what we started to see is there were companies that we thought, people that I respected, who were going to build and said, if we want to be regional, we have to go now. And so I'll add on that a little bit, which is we then needed to find the right person. It took us a year to find the right person for the Philippines, so we just waited impatiently. And then COVID hit, and so I'm a big believer in Warren Buffett's idea of be greedy when others are fearful and fearful when others are greedy. So April 2020, when we were freaking out, I was like, let's go launch. And so we launched April 2020 in the Philippines, and then I think now we're the biggest at what we do.
That's called timing the market. April 2020, that was a hallmark month. Great, and it's interesting that your international journeys or the push or the pull for regional expansion really started off being market-driven, where customers are saying you guys need to be in many more markets. But how do you balance that out by taking a step back and saying, hey guys, hold on, there's a lot of demand clearly, but as a business that you want to build, what are the strategic markets of focus for you? How do you assess markets? How do you assess, say, a Philippines versus an Indonesia or a Thailand or a Vietnam or whichever markets that you're in? How do you relatively assess and take a call that this is a priority market for now, and these markets maybe we'll look into down the line?
Yeah, that's a battle we really felt, because on the board we're lucky to have American investors and Chinese investors. So the Americans were like, go do one thing, focus, do really well. That's how American companies are made. And the Chinese investors were, why aren't you doing 50 things? You're doing so poorly. And so with this natural tension in the boardroom of what should we do, expand or stay in one place? And then I think for us it came down to we had waited so long and the desire of customers were there that we started becoming less able to compete, because then they started looking elsewhere. So I think our hand was forced. I think we also saw structurally that there were other bigger companies than us that you could see, if you are singular country focused, it's really hard to go tell a story, I think, at later rounds than if you can tell a regional story. And also the margin profiles are very different of countries. And I think margins in this market are very low compared to margins outside. So if you're going to build kind of a healthy IPO-able business, you need something that has kind of better margin profiles. So to make that mix, to diversify that risk, it was like we had to go.
Got it. So fairly top-down in some ways as well, where you said, if I look at the 5-year vision for the company, then you need to be sort of regional. You need to be across multiple markets. So very interesting. And Kelvin, for you, was it all part of the plan, the sort of sequential expansion that you've had?
So it was always part of a plan, and that maybe two parts to it. What are our decision criteria, and how are the various factors that may impact your decision criteria based on your context, right? So when we first started off in the countries that were chosen was based on 3 key criteria, right? Candidly, we just copied from the Good to Great book, right? That basically a country that we can be that is sizable. So I don't want to go into a small country that, hey, I spend a lot of work, I earn very little, right? That's number 1. Number 2 is that, hey, a country that have a path to be number 1. So if I can't be path number 1 or worst case scenario number 2, why bother even doing it, right? And number 3 is that a place that I'm excited in. So because whenever we start a new country, I actually fly out there very frequently. So we started in Indonesia, I flew out every single week. Monday, Friday, Monday, Friday, Monday, Friday. If you don't like the country, it's kind of not a very fun place to go to, right? We see that as a necessity. Now that we're in 5 countries, I still fly every single week because I visit one country once every month. That's every week that I'm flying, right? So it's a place that I enjoy going. So sometimes I ask my early launchers, like, dude, how do you like Sri Lankan food, or how do you like Filipino food? And then I see whether, hey, we have someone who can support my launching. So really sizable, path to be number 1, as well as personal passion. But we also were balanced by other factors, which I think that may be more relevant for your business, right? Number 1 is that why we have gone to many countries quickly is because we see that our business as a long game business, right? That it takes a long time to actually influence the regulators. It takes a long time for us to collect data. Our first 36 months, the volume is always negligible growth because I need to collect data. So there is a first mover advantage. There's a branding advantage. So I need to start off early. I need to figure out the market, right? And also we find that we see ourselves as a high volume, low margin business relative to consumer financing, right? So I need to hit certain scale. Therefore, I need to be in multiple markets. So because of that, we decided to go into multiple markets earlier. And I think the last point is also that we find that because we're in a credit risk business, that's tied to economy a lot. We see diversification as very, very important. So if you're in a single country, anything happens to that country, then we're kind of stuck. So that was very obvious during COVID period, whereby when COVID struck, closed down Singapore and Malaysia, our Indonesia business was supporting our numbers. And when Delta hit Indonesia, my Singapore, Malaysia, Thailand business is supporting the numbers. So our numbers are always steady, which is more helpful as an overall growth profile when it comes to future listing and whatnot. So that was why we thought it makes sense. But for other nature of business whereby localization, first mover, margin requirements doesn't require to expand, I probably would not have expanded in so many countries so quickly.
And what was the first quarter or 2 quarters in Indonesia like? What were some of the learnings that you already had that sort of transferred fairly easily, and what were some new discoveries, things that didn't translate as well?
So I think because SME financing is such a localized business, we find that actually what is transferable is really just probably 50% of it, be it in terms of some first principle systems, policies, so on and so forth, right? For example, customer segment, you can't transfer. Data you can't transfer, demographic, economic profiles you can't transfer, so on and so forth. But I think so to that extent, transferability is probably 50%. But what we also find to be most helpful is to make sure that you groom a group of launchers when we launch in new countries, right? And candidly, we copy from some other startups as well, that folks who knows cross-function, not just one function, folks who have been with you for a long time, who is a culture barrier for you, right? So we find that sending them to a new market becomes important, on top of having a solid country head who is local. Because for local SME lending business, if you are pure foreigner, even if you are really smart, actually it's quite hard for you to do very well. So that's why we wanted to make that combination.
And what about you, Moses? How did you figure out some of these cultural barriers that Kelvin spoke of?
Yeah, one of our principles from day one was it's very clear that when folks come to Indonesia, you have to be very localized to do well. And I think there's many foreign companies that have come, refused to localize, and therefore failed. Many who come and aren't committed and then disappear when the money runs out. And so for us, it's always been, how do we make sure we understand that if you are American coming to Indonesia, you can have unlimited money and still lose the war. So it's about how do you make sure that you are playing and doing the right things in the local way. And so when we went to new markets, it was a very similar mindset as we're Indonesian, we're not Filipino, we're not going to go to Philippines and pretend that we know what Filipinos want, especially in a B2B business, or how things work. So I think we had to go with that sense of humility and say, what dear customer do you actually want? And then over time build that. Some of the similarities are within Southeast Asia. Most of our countries are run by big families. Most of our countries have similar kind of business dynamics, so some of that we could take across. But I think the starting point was, we know nothing, we'll learn from scratch, we'll be local.
Interesting. And how do you send out those signals to the market saying that we are here, we're committed, and we're going to stick around? We're not going to be fly by night and run at the first sign of stress.
Yeah, I think the example for us in the Philippines context, the first one that we went to, there's a history of kind of foreign companies that seem to come, set up, lose tens of millions or $50 million and then disappear again. And so we said, okay, our approach will be different. Let's go put feet on the ground. We'll be really quiet for a really long time. It took us a year to find the right people. And in those times, we'll build relationships. But we'll show that we're not here to dump and run. We're here to build slowly, the kind of Southeast Asian way, build the right relationships, show that we're committed to stay, bring on the right families and investors into the pool, and then launch in a way that we can demonstrate unit economics from day one, which means we have actual sustainable business, rain, hail, or shine. So I think those were some of the things that we tried to do is stay very local and then prove that we had the unit economics to survive over the long run.
And what was your experience, competing with local players that already existed? Sure, some of your initial clients wanted you to expand and that kept you busy when you got started. But as you started looking for newer customers in the market, what was that experience like? What was the customer mindset? Did they know Xendit as a platform that existed elsewhere and they were more than ready to sort of trust right off the bat? Or did you have to spend more time building out that trust with customers?
Yeah, our principle, so whenever we launch a business, our rule is once you launch, you have to launch within 3 months, and then the business has to grow 30% month on month for the first 18 to 24 months, otherwise we'll cut it. And so much of the prep for us is trying to make sure that when we launch, the product will be useful enough that and solve a problem that they will go tell their friends about. And so that's always the goal. I don't think we execute perfectly. But what happened in the Philippines was some of our regional customers took us there. They were our first customers to help us kind of clean out all the bugs in the system. And then it became us relying on them to tell their friends to use us and other kind of B2B, other enterprises to use us. And that's what drove so much of our traction was very small team, but customers telling their friends to use us, which is kind of similar to how we grew in the first few years of Indonesia too. So I guess that was cheating a little bit in how we sold, but that's what got us the first couple of years.
That's amazing. Yeah, clearly word of mouth is probably the most powerful customer acquisition channel that you can have. And Kelvin, as you pointed out, your business is highly localized, right? So for you, were there customers that sort of were already across multiple countries? And for the new customers that you were looking to acquire, how was that journey building trust with them?
So maybe two, three lessons. One is that we do have multi-country customers, especially startups, right? That helps us to scale to the next country. But what we find is that when it comes to lending, you don't have much word of mouth. Like you don't tell your friends that I just borrowed from funding societies. Maybe at some point we'll become a premium brand that if you can get a card from funding societies, you're awesome, right? But we are not there yet, candidly. So there's very little word of mouth. I think for us to build credibility and initial reach was that, number one, of course, we need to be licensed, and it takes 10,000 years because usually in our markets, there isn't such a license. We work with the regulators to create that license or to adapt that license, right? So license, but also we find that PR to be a very important tool. For good or for bad, people don't believe in marketing anymore. They believe in news. Even in the case of US, fake news, right? So how can you be in the media in a very structured and thoughtful way? It's also why I noticed that when we first started in Indonesia, we were on the news almost every other day in Indonesia because there's so many media outlets. In new countries, usually we're in the news almost every other month or at least quarterly, so that we start building certain level of profile and people can search about us and see us there, right? Because PR is quite powerful and you need to be deliberate, right? Make sure that you have done something that's newsworthy for others to talk about rather than just saying the same thing over and over or trying to self-pitch yourself, right? But the last point I want to make is channels. I find that the channels that we use are what investors usually don't think that is great. But at some level, we also feel that if I enter the market, our goal is that the country should be profitable within 24 months as a standalone, excluding group tech and GA, right? It has to be profitable 24 months. So we usually track, hey, out of this year, how many months are you profitable and how we work towards that, right? And if we go by that approach, going by what investors ask us to do, candidly, we'll never get there. So example for when it comes to SMEs, everyone says that you should go digital, but the reality is that when it comes to SME financing, the digital SME tends to be smaller, which also means that your unit economics will be suppressed because of the ticket size and the risk is being higher. And without data, how are you going to assess and go and handle the volume? That's why we always start off with a small sales force so that I can have direct touch, but also working with third-party brokers so that I can pay on a success basis and extend reach. But these are the channels that usually investors don't see that as valuable. But I find that the starting point is actually very, very impactful. So over time we find that, hey, let's focus on what makes sense in terms of building a sustainable business and find investors that agree with us rather than necessarily, hey, investors that preach a certain thesis that we don't agree with.
No, that's a very astute observation on sort of managing your board and investors. What are some of the areas that you find businesses that are local, single country focused, where do they have an edge? Where do you have an edge over them?
I think if you're single country focused, you get to specialize in how the business dynamics and political landscape work. And so, and you have the ability to only do one thing, which I think is immensely useful to have focus. Once you have different countries, then there's languages and cultures to deal with. So I think that's a benefit. And I think that's right, like when you're early on, to make sure that you can go win and demonstrate that you can become market leader in one place in some niche, even if that's a 300 million people niche. At some point, though, I think for those of us who want to be venture-backed and build massive businesses, you kind of have to reach across the fence and see how you grow beyond what's a single market. So I think you have to at some point. But there are advantages when you're small, I think, to just doing one thing.
And to solve for that, how has your playbook been the same across all markets that you've expanded into? Has it always been about hiring people, organic growth? Have you also considered inorganic, acqui-hires? What are the different strategies that you've used?
Yeah, I'll talk about within the business, and then we can talk about inorganic or organic. Within the business, when we built, we said we know that eventually we want to be able to be multicultural if we want to be. So we made certain decisions where we said, let's try blend international and local, which is kind of who we are as people as well. And so we made certain decisions, and very tactically, if you're building a business, we made crazy decisions like we force everyone to write and document things in Amazon 6 pages. And you can go Google what that is, but I spend a little bit of time at Amazon. But it's very kind of counter-cultural to Southeast Asia, where everything is typically face-to-face and tribal. But what that forced is there's a bunch of benefits to it, including in markets where you have introverts mixed in with extroverts, you allow introverts to be able to speak faster, because what happens when you go into a meeting, everyone reads a document silently for 10 minutes and comments on the document, which means the loudest person in the room and the softest person in the room gets to speak at equal loudness. And things like that, I think we had lots of decisions that looked like that enabled us to say, hey, yes, we will be hyper-focused on winning Indonesia first, but it gives us the option that when we go to another place, things are already documented, we already have this culture where things can transverse over the internet or over water rather than rely on face-to-face. On the organic or inorganic, for us, there's been a mix of how we've gone about it. I think in our business, we need licenses, and typically that can take a really long time to get. So sometimes you have to do inorganic to go faster, because startup speed is often fast. I think beyond that, though, it's always been for us how to find the right culture fits of folks that we like to invest in or end up doing more than purely investing. And where, if and when we can find the right culture fits, people that feel like they would blend in easily, we've made decisions to do a little bit more. But otherwise, I think we can build good alliances with folks in market and make sure that many people kind of get a share of the pie.
Maybe on a point of single country versus multi-countries, and subsequently on a organic versus inorganic side, at least we find that probably a few points. One is that when it comes to single versus multi-countries, our choice of decision is whether the key success factor of a business relies on being hyper-local or not. That's number one. Because we find that some businesses, especially in Southeast Asia, being doubly focused doesn't make you execute doubly fast. In fact, the increment, it can be quite little. It really depends on sectors. So for example, if you're building an alien business, right, meaning that there's no such business before, you need to do first principle business model, understanding business model, testing out, so on and so forth. There's something that's very localized to a country. Then being focused in one country makes sense. But if you're building, at least in our mind, we are building a business whereby candidly data is critical, it's a key success factor, but being focused in one country doesn't make the data better. What data is available is available, what data is not available is not available. It will take time also, right? So to that extent, for our choice, we didn't see that there's a lot of synergy, a lot of additional value towards being single country focused. In fact, we do find that over time there's a bit of advantage being cross country in a few ways. One is that, of course, serving regional businesses, that's obvious, customers, that's obvious, but also diversification, that's obvious. But what are less non-obvious is cross-learning. For example, we launched our Sharia financing first in Malaysia because the government is pushing and advocating it, and then we are bringing it to Indonesia because our Malaysian team figured it out first. And that helps me to cross-learn. We figured my car dealer financing in Malaysia first, and then we bring it to other countries, so on and so forth. We saw that there's actually value towards cross-learning. We also saw that there's value towards sharing of costs. For example, the better tech people tends to be in Singapore, but if you use them to just serve one country, it's really expensive. So we try to use them and spread our costs to multiple countries. So at least that's how we think about it. It really depends on businesses because some business really benefit from just being in one country alone. So it depends on the level of localization and extra advantage in terms of being hyper-local. But when it comes to acquisition, we have done one deal, which is the acquisition of Cardhub, the payments company in Singapore. And the whole thesis, I think what makes sense and what did not make sense is that we acquired because of product. They're offering a payments product. We acquired because of team. DNA of lending and payments is very different, and it's too long for us to actually train. We acquire because of license, and we acquire because of customers, right? So that makes sense for us. But we also find that it takes a lot of pain towards post-merger integration, retention, so on and so forth, because if a thesis is talent, you want to make sure that, hey, they don't just stay through the earn-out period of the M&A, right? They stay through after the whole period, right? And therefore, integrations and whatnot, culture, so on and so forth becomes really important. So we find that, so after the deal, sometimes people ask me, hey, we'll reach out and say, hey, Kelvin, I just done one M&A. What about this company? I said, dude, one M&A is taking me so much effort already. That's enough. Give me 2-3 years to digest it, then I consider another one. And every M&A deal, we need to make sure that it's a step change in terms of business rather than just incremental growth because that's the amount of management attention it's going to take you towards digesting it in a successful way.
Yeah, I think this post-merger integration point is, it's something that's often underestimated because in boardroom conversations are usually around Excel sheets and market sizes and, hey, this asset looks like a good strategic fit. But when rubber hits the road, when you actually have to integrate, there are people involved, right? Which is always complex. And you have tactical tools that you can use to kind of make sure that people stick around, make sure that there's a smooth transition. But how do you really make sure that people integrate into the organization, the culture, the fiber of the organization that you're trying to build, right? So what are some of the ways that you've gone about it, Moses? Any experiences you want to share?
I think our sample size is small, so I don't know how much I can say. But I think what has been useful is understanding the true motivations of why someone wants to be part of something like us, and understanding what do they want to accomplish. Sometimes it's ego, sometimes it's money, sometimes it's self-realization, sometimes it's something else. And so being able to identify what really motivates someone and why would they want to stay around, and then aligning that with a set of incentives about what we want as a business and making those make sense. That has seemed to work. I think the companies that we've ended up working with closely, we've managed to keep the founding teams longer than the contract says they should stay around, and I think that's all about trying to find what do they care about and giving that to them, which often is for founders, I think we get it. We want autonomy, we want freedom, and we don't want to have to deal with investors. So we just make sure that they can run and they're funded to run, hit their metrics. Great.
This is the conversation we often have on the boardroom. At Kona, we are a global fund where we invest across emerging markets, right? And there's a natural tendencies where companies do want to go regional. They have ambitions of expanding out in markets like Southeast Asia or Africa. And we need to keep reminding ourselves, and especially as the cap table expands, you've got more investors who are not necessarily in market and are as plugged in. And the view tends to be that regions are monoliths, which is rarely the case, right? Like if you look at Southeast Asia, culturally, economically, behavior-wise, it's so fundamentally different from one market to the other. And you often tend to underestimate in these expansion strategies, particularly inorganic, Because in organic, you still have the benefit of hiring for culture. So you're setting the right precedents, the right tone from the very beginning. But in inorganic situations, it tends to get very, very complex, managing people, estimating how customers in different markets would react and respond to a new stack that's now operating under your brand name, right? How do you ensure the same consistency of delivery and quality across your product stack as well? And again, team culture and company culture becomes super important. And Kelvin, any tips, suggestions on how startups who are looking to expand regionally can try to bridge that gap, particularly internally within the team?
So culture, but actually before I get that, I wanted to highlight that I think we keep talking about regional expansion and whatnot, right? But maybe what we have not talked a lot is the cost of it, right? Because I find that, yes, there are a lot of advantages, blah, blah, so on and so forth, right? But we also see that a lot of companies expanding out because they are not ready, or from a management attention or resources perspective, you end up just throwing money and get nothing out of the expansion, and you shut down the new businesses, right? For example, if the founder is not willing to fly down, candidly, the chance of that country being successful, if it's a hyper-local business or it's a localized business, is actually quite low. When we entered Vietnam, we started off in 2019, we shut it down in 12 months because it just did not work out and have to restart again, right? Even for a tech prioritization, if you're in one country, you can just prioritize for one country. The conversation is very straightforward. But you have in multiple countries, then you need to go through the ICE model, blah, blah, so on and so forth, to think through which one to prioritize, right? So making sure that management attention or organization structure to manage that complexity is there, and the resources is there. Otherwise, candidly, the ROI of you entering a new country is not worthwhile. But when it comes to the culture side, I think one thing that one of our early shareholders, investors, Sequoia, shared with us, which was helpful. Not all things that investors say is that helpful also, but this particular one was helpful, is that when we first started, they asked us to do two things, right? One is not to grow too fast. We are a credit business after all. Number two is codify culture. So basically, we had a whole management team coming together. We did it a bit of a both bottom-up, top-down approach, whereby we have bottom-up in terms of what is surveys in terms of what core values important to you, so on and so forth. And then we have a top-down workshop that's facilitated by founders with the top management to codify a few choice words about all our core values, as well as description of what this means, behaviors that we encourage, behaviors that we don't encourage, right? And that we have also advocate that the core values of the company should overpower the country culture. Because every country has certain work in different ways, right? But the core values of companies should be demonstrated in some ways through that country culture as well. And that's helped us to build some level of alignment. For example, within Slack group, we use Slack Messenger internally, right? And the expectations is always that, hey, barring the response time should be within minutes, if not hours, right? Yes, you're in a meeting, therefore you cannot respond, understand. But if everyone takes a one business day to respond, which is what many country culture is, the whole organization becomes very slow. Because back and forth, one business day, that's 1 week for a conversation that could be done quickly, right? So we started building that expectations, even if you're in Indonesia, you're based in Indonesia, right? That, hey, if anyone texts me, I'm going to respond quickly, because if a CEO can do that, you cannot be more busy than me, right? So you better do that as well.
Very interesting. And no discussion with fintech founders and investors is complete without discussing the regulatory environment and the regulators. So what's your experience been on the regulatory front as you expand out? And I bring this up on the 3-minute mark, otherwise I'm sure we would have gone on for the next 30 minutes talking about it. So what's your experience been, Kelvin? Anything you'd like to share?
So we have dealt with many regulators across the countries. I think few things that have worked out well for us. One is that it's really humility, right? But at the same time, helping them to get through it. Because you'll notice that a lot of regulators don't know enough. And it's very hard for them to know enough because the tech space is changing so quickly. So you need to help them to get up to speed, but in a very humble way, because you don't want to come across as you're an asshole trying to tell them how to do their job, right? Because a lot of them have pretty high level of pride as well, because they're regulators after all. So the key is that how can you actually get there without, bring them through a journey. So one example is that when we first started, we basically studied the regulations across the world and go to regulators that, hey, these are the risks in the industry, this is the benefit of the industry, these are some of the regulations that others have done, this is what we think maybe you can consider doing it in this country. and then we leave it to a regulator so that we help them to do the homework, but at the same time do it in a more suggestive manner rather than say, hey, you guys know what you're doing. Can you get your regulators just up to speed or not, and rub them the wrong way unnecessarily?
What about you, Moses? Anything on the engagement with regulators across different countries that you want to share?
I think the wonderful thing about Southeast Asia and the regulators here is we have the chance to learn from across the world what worked and what didn't work. And I think compared to other markets that I've seen or operated in, the regulators here are keen to learn relative to others and willing to experiment relative to others and do things that are different and localized. And what I think that has meant is there's plenty of different agenda items and legacies people want to leave and things that they want to do. So for us, and I think payments is rising in the agenda of various leaders across the region. It's been trying to find, hey, what are those common sense or common areas where we want to build together or we can help further an agenda that we think and they think is good for a nation, and then try to latch onto that and make sure that we're providing some of those. So I think that's been true in all our markets, is that we're trying to find, hey, what do the regulators want? What's the central bank or the Ministry of Finance or the presidency? What are they trying to push forward? And how can we help them achieve the agenda items in many cases where we also believe that it's good for the nation? So that's been our goal.
Amazing. So with that, we're nearing the end of our discussion. Thanks so much, Kelvin. Thanks so much, Moses, for sharing your insights. Unfortunately, we're on time, but we would be available. We would be around on the sidelines in case you do want to continue the conversation or have any further questions. But thank you so much for sharing your insights with us today.
Thank you.